Yeah, hello and welcome everybody to the channel again. This is International Taxation, the introductory lecture for people who want to have a first idea. And we have already spoken about three methods to avoid double taxation. And today we go over, or we talk about a fourth method which exists, at least in theory. It does exist, the so-called lump sum method or waiver method. Now, what is it about? The method consists of simply the fact that the state renounces on all of its tax claim to foreign income or on a part of it. So, in principle, it's not really a method at all, but a completely arbitrary decision in the individual case to grant a kind of a discount on the normal tax which would be due under normal circumstances. So the lump sum method says the state does not fully collect the tax which is due for your foreign income or for a part, certain items of your foreign income. Well, how can we get an idea of how that might work? Let's think about taxpayer T having foreign income from a foreign state of 100,000, and now normally a tax rate would be due with 40%, so 40,000. Now T probably gets some nice offer from the state. Well, what about paying only 20% or paying only 10% or paying only 5% or paying 30%? Whatever seems adequate to the state could be agreed upon or could be offered as a relief for a potential double taxation. That is the character of the lump sum method. So you just grant a relief, you grant a discount on the regular tax. It might even be that the state says, well, in that particular case, I renounce completely on the tax claim for that foreign income or that part of foreign income because there are some reasonable motives for me to do so. For example, to make my economy stronger or to support a certain project which I regard as prestigious or favorable for state and economy. I do not know which motives there might be, but you see many outcomes are possible here. Now, what you must first now understand is that granting a relief under the lump sum method has nothing to do with any built-in logic. When you apply the credit method, there are strict rules how it's done. When you apply the deduction method, that is absolutely clear how it's done. If you apply the exemption method, there are clear rules. Here, there are not. Here, the lump sum method would just be the permission for the state authorities to say we take less than we usually need to. So the method is actually not a method at all. It's just the legal allowance or legal permission to reduce the tax burden below the regular amount. That's it, plain and simple. So you do not pay then the regular amount, but you pay something else, usually less. That is where the name lump sum method comes from, at least when we talk about that in that way. The idea is, a lump sum payment is something where you deal with some complicated matter in a way that you make once and for all the payment and then all the claims of the other side are cancelled. So same idea here. Instead of paying the regular tax liability, you pay a lower amount and that's it. So an arbitrarily fixed amount deals with all your tax obligations for that affair. How is the method applied technically? Very often you see, or you have now the idea, it might lead to income which is in the final effect even tax-free. Will it then require the application of something like a proviso safeguarding progression? Or will it end up in your tax rate being lower than it should be? And the answer is a firm yes and no, because by the way, how the lump sum method is technically applied, you never have a problem with the progression. So yes, indirectly you have the same effect as a proviso, and no, because of the technique how the lump sum method is applied, you never have a need for a proviso clause. Now I hope you are a bit curious, because the way how that method is applied is, first, that income which is involved is completely regularly added to your taxable income. The tax is completely regularly computed, so you do not have a problem with the progression. That privileged income, which later leads to the lump sum method, is completely regularly taxed first. So it enters the computation completely. So you never seem to be poorer for the calculation than you really are. So you do not need an auxiliary calculation for how wealthy you really are and what tax rate you deserve. Only after you calculated the regular tax burden, then in the second step, then the fisc says, okay, we renounce on a part of that tax which we just have calculated in order to do you a favor. From the expression, we renounce on a tax, it follows that you first calculate your claim, and then we do not demand the payment for a certain amount of our regular tax claim. And that is why you have this sequence of steps, and that is why you do not need to bother about proviso or not. There is no need for a proviso because the lump sum method does not work with tax-free income. It's just after you calculated the tax that you renounce on collecting the complete amount. So how would it be done? Imagine you have an income of 100,000 from the inland plus 500,000 from abroad, and now you want to apply for a lump sum method agreement. The best potential case would be the fiscal authorities agree to 0 for the 500,000. Then, however, the tax would be calculated still as follows. So 100,000 from the inland, 500,000 from abroad, total amount 600. Now, 600,000 leads to a tax of, in 2022, 252,397. So that's your total tax. And as you see, we have calculated that on the basis of the full 600,000. So the progressive rate is automatically the right one. You have been taxed at the percentage which is adequate for your complete wealth. Now the next step is then we want to apply for a reduction of the tax which refers to the foreign income. That is 500,000 out of a total of 600,000. So 5/6, that is 210,331. In all probability now, according to logic, relates to the foreign part of the income. So for this 210,000, we can now apply for a reduction under the lump sum method. And imagine now we really do what I supposed to do. First, the state agrees to a reduction to 0. In that case, 210,331 would not have to be paid. Your remaining tax liability would restrict itself to approximately 42,000 when you see the two figures. It might also be that you can't motivate the fisc to agree to such a generous solution, so that you make a suggestion under the method and say, okay, instead of 210,000, that's a bit harsh. I also have to pay taxes in that other country. What about paying 100 instead of the full 210? In that case, the fisc would renounce on 110,331, and so your tax burden would go down by this amount exactly, and 252,397 would go down by 110,331 to 140,065. That would be just how the method works. Yeah, now we must develop some feeling for real life. If the application of the lump sum method depends on the application by the taxpayer will only apply with what the taxpayer can achieve, pleases him or her. So, in the end, the taxation under the lump sum method will end up as a matter of negotiation. Naturally, you don't have a good negotiation position when you have already done what you will be taxed on. But in advance, there might be good possibilities. For example, step one, you approach the fiscal authorities and say, I have an opportunity to earn abroad 10 million. But then 45% to pay on the 10 million, that's entirely out of the question. That's too much. So please grant me a reduction that you are going to renounce on 30% out of the 45 so that I only have to pay 15% on the remaining amount. Then probably the reaction of the fiscal authorities will be, no, that's out of the question. No, 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 no. 20% is the highest what we can do. What would you do as a reaction? Then you would say 20% to pay 20, only a relief of 20%. That would have the consequence that I still have to pay 25% here, and the tax abroad, that's too much. I have 7 children, blah blah blah, and so on. So the full scale of your negotiating techniques, which you practiced on holiday in bazaars in foreign countries, the full scale of your negotiation abilities is brought forward, and in the end, you agree to something with the fiscal authorities. So you see, the lump sum method can, in the end, yeah, just depend on the negotiating techniques and abilities of the two parts involved. So it's completely arbitrary what comes out. And that is something which you must then understand. The result is completely due to coincidence. That violates some of the most basic principles of taxation. First principle is taxes should be fixed by law. Okay, lump sum method changes us. Tax is calculated according to law, and then nobody cares about the tax laid down in the law, and you pay something else. Completely without logic. Then, the negotiating character of the outcome also changes the basic nature of tax. Usually it should be a compulsory payment. Here it comes near to a voluntary payment. How much would you like to pay? 10%? If it's more, you are no longer willing to earn that money? Okay. So you might even, in the end, have the feeling, okay, I'm willing to earn some 10 million abroad and then I'm willing to give 12% to the fisc out of sheer generosity. If they make me angry, I don't do that. So then I refrain from my activities if they don't show some decency. And the next fundamental principle is, which you remember, equal treatment, equality of taxation. People in equal situations should be treated equally. Also, that dies a silent death, because if in the end you apply for a reduction and everybody negotiates a different reduction in his personal situation, then in the end the outcome is no longer equal for several people. When it comes to the economic consequences, nobody can predict them because nobody knows what comes out in the individual situation. So some people might have a worse situation in competition than the direct competitors. Nobody can ever guarantee that people are treated equally, and so on. So there is a mass of problems. From the perspective of EU law, there is even an additional problem, and a decisive one now. The lump sum method brings a huge problem. because everybody among you knows that paying money to an enterprise in order to allow that enterprise to be better off in competition is a state aid. And everybody among you knows that in Europe, state aid is forbidden if it has not been explicitly allowed in the individual case or for a group of individual cases by the EU Commission. Now, giving 4 million in cash to an enterprise in order to help that enterprise survive an economic crisis is naturally the same as telling the enterprise, you owe me 4 million, forget about that. Keep the money. It's absolutely the same when giving the 4 million to the enterprise. So it's absolutely clear that from the perspective of EU law, reducing the tax burden of an enterprise below the usual level is a state aid and is forbidden. The only thing by which you can very often save a favorable tax rule in real life is the argument that you say, we do not reduce by this rule the tax burden of an enterprise below the usual level, because that rule is our usual level. That rule follows from the logic of our system. So it's not a deviation from the usual level. It defines the usual level. For example, with that argument, you can say that Germany does not tax dividends which go to a parent company is not a state aid. It's a logical consequence of the German tax system, which says corporation tax should not pile up again and again and again on the same profit within the group. There should only be one corporation tax. So that's clearly not a state aid. That's a result of the logic of the system. Now try to defend the lump sum method with that. You can defend the credit method. It has a logic. You can define the deduction method. It has a logic. You can define the exemption method. It has a logic. You can't define the lump sum method because the outcome doesn't have a logic. It's completely arbitrary. If you were willing to allow the lump sum method, an arbitrary reduction of tax, you could directly skip the whole state aid rules. Imagine an enterprise approaches a ministry and says, we need help. How much help? 4 million. Well, EU forbids me to give you 4 million. Okay, do you have foreign income? Yes, we have. Okay, then we just reduce the tax on the foreign income by 4 million. That's okay then, yeah? Okay, thanks. That's so easy. It could always avoid the application of state aid rules. It would bring along the downfall of all these rules, and so it can never be tolerated. Yeah? So every application of the lump sum method automatically qualifies as a state aid. So every application of the lump sum method in an enterprise case to an enterprise needs the approval of the EU Commission, or it can never be legally valid. And now surprises, the Commission has decades ago begun never to grant approval to such a lump sum method case again. So for enterprises, the lump sum method is dying out, or in most cases, it is already stone dead. A few dinosaurs of tax law still have survived in certain oases and faraway locations. For example, in Germany, there is one remaining case constellation where the lump sum method can still be applied to certain income of enterprises from third states where Germany has no DTT with, due to a decree which was issued by the fiscal ministry in the 1980s, and which evidently at the time got permission by the then existing European Commission. But this decree cannot be adjusted to the changes of time. It cannot be made more favorable than in former times, because that would be extending a state aid and that would need a new commissioner. We won't get it. You can't add additional activities to it because that would extend an existing state aid. We would need a new commission. We won't get it, and so on. So that is really dying out. Nevertheless, although the lump sum method is in principle dying out, we still have legal rules in the ESDG. There it is still legally existing, and it is still mentioned there. So we still have a legal basis in German income tax law. Only EU law forbids to make usage of that in most cases. 34C paragraph 5 says the government can renounce on all or on a part of the tax referring or relating to foreign income if the taxpayer so applies, and if it's economically advantageous for the German economy, or if the application of the credit method poses particular problems. So there are some inbuilt restrictions. For example, the first thing if you read the text is the application must refer to foreign income. And what is foreign income follows from the list of 34D. You know, when we talked about the credit method, I mentioned that you can only apply that to foreign income under German law. And what is foreign is strictly regulated in a list in 34D ESDG. So what's not on the list can also not become subject of the lump sum method. In addition to that, naturally, already when this rule was written decades ago, the legislator had already a feeling which damage it could done to justice. The negotiation character was highly suspicious, and so they said, well, in reality, we probably have to expect that people begin to pay bribes to the fiscal officers, that they accept an application for a lump sum treatment. And so in the end, that's chaos. Yeah, we must restrict that. And that is why in the German text you find then the condition that the lump sum method can only be applied if both the Federal Minister of Fiscal Affairs and the Fiscal Minister of the land of the Federation in which you are subjected to the tax procedure, if they both agree to your application. That has an interesting consequence. If, for example, you obtain that yes by bribes, and the scandal comes up, then you can be sure that two top politicians have to step down from their offices and resign just because of this permission. So you connected that to the highest possible obstacles. You must get permission from the highest political level, and so you have the highest precaution against an abuse. At least one can hope so. And there is even something which is not built in really into the text of the law, but was usually done in practice, in order to safeguard equal treatment as much as one can. Usually when an application for a lump sum method treatment was accepted by the fiscal authorities, then this usually led to the publication of a decree which then said everybody who is in the same position, same circumstances as that person who applied yesterday, everybody who is in the same position now or in future can also appeal to the application of the lump sum method with this and this outcome, and this application will be accepted. That is, by the way, the reason why this decree from the 1980s still exists for the application of the lump sum method. There was once and for all a published announcement: whoever in this and this situation applies for a lump sum treatment will get a yes. Good. So that was a way to ensure at least a minimum of equal chances for all taxpayers in equal situations. There is therefore still existing relevant the so-called Pauschalierungserlass, which might be translated as the lump sum payment decree from the 1980s. It allows a lump sum treatment for very few and special kinds of foreign enterprise income from certain branches, and only for certain countries. There is still also existing a decree on workers and other employees' income from foreign countries without where there is no double taxation treaty. The so-called Auslandstätigkeitserlass, or one might translate it as the workers or foreign workers and employees income decree, which says under certain circumstances in very few branches and very few selected countries, one can appeal to the German authorities that the tax for the foreign income is reduced to zero in Germany. Okay, so the lump sum method is really rather rare. Apart from this, there might be a second function, important function of the lump sum method in strange cases. I mentioned 34C, paragraph 5 says the lump sum method can also be applied if the application of the credit method is extraordinarily difficult. And well, okay, it might be that mathematical difficulties arise. I can't even imagine which ones. But there might also be a political difficulty. Imagine you obtain income from a foreign country, and that foreign country, there you were taxed, but the foreign country doesn't exist officially from the perspective of the United Nations, and it has not been acknowledged as a state by Germany. And now you present a tax bill from the tax office of that state and say, please apply the credit method. And now the tax officer says, hey, if I now apply the credit method officially, then I would recognize this entity as a state. That brings me under critique from the United Nations, from the foreign ministry, and I will get slaughtered in public. What about a lump sum agreement that we, due to the difficulties in that case, is it a tax, is it not a tax? A tax can only be levied by a state, but this is perhaps not a state. Perhaps we can agree on a diplomatic solution. We agree on a lump sum solution, which in the end brings exactly the same outcome as if we had applied the credit method. We had not. Yeah. So there the lump sum method would then probably also not constitute, in that particular case, not constitute a state aid, because then it would just constitute a diplomatic way to avoid diplomatic problems when we have to debate if something is a state or not. That is, I think, a reason why this lump sum method should also in the long run not be eliminated from the text of the law. In that case, the outcome would really follow from a systematic logic everybody would accept. So if we replace the credit method by a lump sum agreement which leads to the same outcome, just because we do not want to say that a foreign entity is in fact a state, that would be okay. But in principle, you can memorize that the lump sum method is completely dying out and mostly already stone dead everywhere, in Europe at least. It seems to have existed in other countries too. That explains itself by the fact that in history, the German tax schools since the 1930s or so had a kind of a model character for other countries. They were regarded as very modern and advanced. So many other countries copied them. Some of these countries even copied them under a relatively forceful influence, for example, because they were occupied by German forces in World War II. Now, so it can be possible, can be imagined that other countries also know something like a lump sum method in their national domestic laws. And from time to time, one wonders when a scandal comes up concerning state aid cases in the tax area, how these other countries have done it. And for example, there was some years ago a Luxembourg leaks scandal where Luxembourg was suspected that they had some 10 or 20 years ago granted illegal state aid in the tax area to many foreign companies or multinational groups to motivate them to go to Luxembourg. And one of the ideas which we thought about when we heard about that scandal first was, okay, which Luxembourgish rule could have been used for that? We couldn't imagine one. And then we thought about, do they perhaps still have, like we have, the lump sum method provision in their text of the law? And did they perhaps illegally make use of it without asking the EU Commission? But surprise, as far at least as I personally could find out, in probably no case which became publicly known, the lump sum method was really and actually used. So that means that even when the state does tricks to attract investors, they do not apply the lump sum method today. Even 20 or 25 years ago, they did not, evidently. They used other tricks of international legislation in order to make their location attractive, but not this one. So it seems to be really and actually the case that this lump sum method is mostly stone dead in reality. So dying out everywhere. Yeah. Naturally, what do we do when some method has died? We try to keep it in a good remembrance, say some nice words about it, because you never talk badly about the dead. And so what remains to me now is to say goodbye. I hope you enjoyed. Can one enjoy something like that on taxation? I don't know. But I hope you enjoyed a bit today's lecture. What you should memorize is only that the lump sum method exists, that the basic idea is that it has no idea. It's an arbitrary reduction of the tax burden, and that this is the reason why, in reality, it dies out and can no longer be practiced, because it is a violation of state aid rules. And by the way, naturally, it is a huge vehicle for corruption if it's not strongly secured by precaution measures. Goodbye. Good. That was it for today. Thanks for watching. Would be nice if you press the like button. That's good for some sports activities. It keeps you slender and slim. Recommend the channel to others if you like this channel. And please, if you don't like this channel, recommend it to 2 or 3 others also whom you don't like. So to give the channel a bit more of success. Yeah, then I just can say goodbye. I look forward to seeing you again on the channel. Recover well and enjoy the time until the next video comes out. Goodbye and till next time.